In this video, we wanted to discuss where we see investment opportunities in Asia in 2025. Now, we are not financial advisors, we're not giving you stock picks here, but we are investors, and what we wanted to do is share with you what we have our eyes on, what are the themes that we believe may influence returns into 2025 and beyond, and we also wanted to encourage you to share your thoughts and your expectations for investing into 2025 down below in the comments section. We'd love to hear from you. Where do you think there is opportunity to make money? Where are you putting your own money, if you don't mind sharing that, and why? So the way we have broken it down here, we are looking at themes. What themes are influencing the market into 2025 and beyond? So there's four main investment themes that we are going to cover here. There is the China Plus One strategy, which is basically diversifying your operations outside of China for business. There is the renewable energy transition. There is a general recovery in markets that have already been hit hard, and if these markets recover, then you might see some returns there. And the last theme is good demographics. Which countries have pretty strong fundamentals moving into the future? So first up, China Plus One. What is it? Basically, this is all about businesses who have previously had their manufacturing based in China or who have relied on Chinese companies for importing components that they then use to build their own product. It's about diversifying outside of China for a number of reasons, such as reducing political risk. For example, Australia has had a rocky last couple of years with China in regards to tariffs being added into goods we export into China. So it's not all about manufacturing. You can be affected both on the purchase and the sales side of the ledger. Of course, there were some issues around sourcing product during the pandemic with extended lockdowns in China, which affected operations all around the world. There is also the trade wars between the US and China and the new tariffs that Trump is looking to impose on Chinese imports into America. This could result in a slowdown in Chinese manufacturing with overall lower demand for their product. Another reason is that China is just not as cheap as it used to be. Wages have gone up significantly. The cost of production in general has gone up significantly. It is still down the lower end of the cost curve compared to most Western countries, but there are certainly cheaper options in Asia for lowering the cost of production and other parts of the world as well. So who do we see being the main beneficiaries of this China Plus One strategy? Well, Vietnam are the big standouts. They share a border with China. There is already strong manufacturing capability there. They have a very low cost of labor, but also countries like the Philippines and Indonesia could do quite well, with countries looking to diversify sourcing of product but also manufacturing outside of China. And perhaps Laos to a degree. They also share a border with China. It's a much smaller country, of course, compared to somewhere like Vietnam, but there is a lot of investment happening in Laos, particularly out of China. Chinese companies investing through special economic zones in Laos. So if they can get their ducks in a row and build up their capability, they could benefit as well. Next up is the renewable energy transition. So this is a big thing in Australia right now. What's going to happen after the election in 2025, we don't know. If the Liberal Party gets in, they're going to take more of a path towards nuclear. But regardless of what happens, a transition to renewables is set in place. It's just more of when it's going to happen, I think. It's already happening in a big way in Europe. There's plenty of demand from around the world for the critical minerals that go into renewable energy manufacturing, such as lithium, nickel, copper, and cobalt. It's not all about renewable energy. Electric cars, of course, are also a big thing. They require lithium batteries and other componentry that is exclusive to electric cars versus, normal internal combustion cars. As far as manufacturing for renewable energy and general components that go into the electrification of various things, China is a powerhouse here. They make a lot of solar panels in China, and they produce 2/3 of the world's lithium-ion batteries. When all this new infrastructure goes in for power supply, there's going to be huge amounts of copper required to transport electricity from the point of generation to the point of use, being people's homes, factories, offices, and so on. And China, again, is the third largest copper producer in the world. Indonesia is a bit of a standout when it comes to benefiting from the renewable energy industry. They are the world's largest nickel producer, believe it or not, and they are also the world's second largest cobalt producer. Next theme I'd like to talk about is the recovery of markets that have already taken a hit. China and Hong Kong are definitely worth noting here. They have undergone a large disruption in their housing industry. Prices have taken a bit of a hit. Real estate is very cheap by historical standards in Hong Kong, although it is still very expensive compared to other places in the world. The general economy in China and Hong Kong is a bit suppressed. The financial sector has taken a hit, but a lot of people are holding out for another round of Chinese stimulus. If this does eventuate, then Hong Kong and China, not saying they're going to take off, but there could be a big bounce back compared to what we've seen in the last couple of years. Another country in Asia that comes of note that has taken a hit that could benefit from bouncing back is Vietnam. They have had a lot of issues going on in their housing sector. There's been some high profile scandals take place and fraud take place. A lot of the condo market has been overbuilt and prices have gone down as a result. If the other factors, the positive factors in Vietnam's economy, influence the housing market, then this could have a bit of an impact on that. We could see prices start to recover a bit more into 2025 potentially. I'm no economist, but these are just things that I'm watching myself. I like to take a bit of a contrarian view to things, so when everyone else is selling, I'm not necessarily buying when everyone else is selling, but I might have my eye on it. I'm keeping a bit of powder dry. I'm waiting for a bit of a turn in the market when I think, okay, we might be turning a corner here and it might be time to put a bit of money into play. So whenever a market takes a bit of a hit, be it the general economy or a specific sector like the finance sector or the housing industry, this will pique my interest. This is when I will start taking a bit of a closer look and thinking about, okay, maybe there might be an opportunity here on the rebound when that takes place. The last theme here is demographics. This is all about a country having solid fundamentals for future prosperity. So not having an aging population, but rather having a quite relatively young population that is going to have a lot of people out in the workforce, a lot of people paying tax, benefiting the country, benefiting the economy, a good solid tailwind into the future. There are other factors that come into it, like the things we've been talking about. What are their industries? What's the supply like? Is supply low or high? Is it pushing prices up or pushing prices down? Is there demand? What's the political environment like? All of these things. So the countries that we believe have pretty good demographics and good long-term potential, maybe it's not going to take off next year. It might be 5 years. Who knows? But the main countries that we have our eyes on in Asia for solid investing demographics and good fundamentals are the Philippines, Vietnam, Indonesia, and Cambodia. So it's all well and good having an idea of where you think you can make money, but then how do you go about executing this? Well, one of the main ways to get exposure into Asia and specific countries, specific sectors, specific investment vehicles is by setting up a brokerage in Singapore or Hong Kong. This is going to give you direct access into various stock markets of the world or of Asia like Thailand, Malaysia, Indonesia, Philippines, all the places we're talking about that you just cannot get by buying like an Asian ETF in the US or in Australia. You get a much higher level of access by setting up your brokerage account directly in Asia. And as I said, Singapore and Hong Kong are the two main players for this. If you are interested in setting up a brokerage account in Singapore or Hong Kong, head over to offshoreinasia.com. We got some information up there. You can also send us a contact form from our website and we can have a chat about what we can do to help you get set up. It's not that easy. There is a bit of a process to it, but we can help you to get set up so that you can start investing directly into these countries if that is something you are looking to include in your portfolio. Now, if you're looking for a financial advisor who knows a bit about how things work in Asia and has their finger on the pulse there, we can put you in touch with someone for that as well if you want a bit more of tailored assistance in what exactly you should be investing in. As I said at the top of the video, please share your thoughts and comments and experiences down in the comments section. It would be really good if we could get a bit of a conversation going on there so that we can all benefit. And we're always really interested to speak to people and discuss where they're putting their money, why they are putting their money there, and so on. So we'll leave the video there, guys. Thank you for watching. Happy investing in 2025, and we'll catch you later.